Friday, November 11th, we had that election thingy on Tuesday. The column nearby has charts appended to the back. And in the 3 days after the election, it's really just Tuesday and Thursday. Today's a holiday in the banking system. We didn't know until Tuesday evening who had actually won this thing. And the U.S. bond market went completely to pieces Wednesday and Thursday. Mortgage rates now are very close to 4, and that's from just above 3.5 a week ago. And what to make of all of this, and the connection between the bond market wreck and the election is undeniable. I mean, there are coincidences. This is not a coincidence. There's cause and effect involved. But the story goes back a ways. The story goes back to summer, goes back to the revisit to the all-time interest rate low in summertime, and the realization in central banks, especially overseas, Japan and Europe, that zero interest rates didn't work very well and negative interest rates are counterproductive. And all of these central banks figure that the next and last ditch is going to be fiscal spending, to step on the hose again, and to have the central banks buy as much of the debt as necessary, and to see if that will ignite global economies, get inflation up, and presumably get the economies going faster. I'm a significant disbeliever. We have tried this before. We tried it in early Reagan, we tried it in early Bush. We did get economic pop for spending that exceeded the damage done by higher interest rates. This time the world is different. I'm not sure that the U.S. housing market can tolerate much in the way of rising interest rates. Can we go up to 4.5? Yeah, I think so. Can we go a notch further than that? Further than that, we'll feel it. I am amazed at how many friends, acquaintances are really upset by the election result. And of course, most of them are Democrats. But there are a number of people who voted for Trump who weren't exactly pleased with the way the world was going. But I would impress on everyone, Trump got the same number of votes nationwide that Romney did 4 years ago. Nothing has changed. There's some Romney voters that didn't vote for Trump, and there are some non-Romney voters who did vote for Trump, but nothing has changed. Mrs. Clinton lost because the Obama majority did not come out to vote, not in equivalent numbers to 4 years ago. That's all that happened. Congress is still under Republican control. The Republican Party is broken into two pieces who hate each other. We have Mr. Trump in the White House, and all of his personal and character baggage aside, it's a whole new day when you arrive in the White House. The burden that lands on your shoulders by the hour is unimaginable. It's not like doing real estate deals. It's in Trump's nature to have wanted to win more than have spent the last several years considering what being president would be like. The anomalies are huge. Normally, a lot of Congress owes its fealty to the president, owes their seats in office. Not one of them owes their office to Donald Trump. Most of their elections in the last year were made absolutely miserable by his candidacy. Usually the president owes his office to the cooperation and help of his party. Not this time. Trump is a complete free agent. He's without any of the normal baggage that accompanies a president into the White House. Where he goes with this, it's impossible to know, but Jack Kennedy complained about a year into office that he couldn't get anything done. And I feel certain that Mr. Trump has no idea how hard it is to get anything done in Washington. So worries about what the government may do are at a minimum hugely premature. The wreck in the bond market is not so much about what Trump may do as, I believe, a tectonic shift that's global, that was underway as late as summer and suddenly accelerated, triggered by the Trump event. And one aspect of the Trump event that's completely unquantifiable is the Fed. Mrs. Yellen barely has a year to go. Her vice chairman has barely a year to go. Another governor has barely a year to go, and 2 of the 7 governor seats are open, which means in the next 16, 17 months, Mr. Trump, less than that, next year, Mr. Trump is going to pick 5 of the 7 governors. Only 2 of the current ones will be in office 18 months from now. And part of the anxiety in the bond market is nobody has any idea now what the Fed will be up to a year from now, or even who will be doing the up. Best to you all. It was a full week.